Charters is an unbiased price action sheep style trader. That means I don't care if the market goes up. I don't care if the market goes down. I just don't care. All I care about is playing the setups. All I care about is catching that level to level move. At least one. And if the market wants to bless me with more, then I'll catch those two using my trading style, using my tactics. There are many concepts that Uncle Charters talks about on this trading channel. One of them is trading with the traps. Guys, if you've been watching my videos long enough, you guys know how I feel about trading with the traps. All right, this is a manipulated market. There is dumb money, there's smart money, and all this market maker BS. People pulling the strings. So what do we do when we know that this market is manipulated? It has a trappy tendency. What we do is we trade with the traps using the greatest trade setups of all times. The false breakouts and the false breakdown setup. Those are my core trade setups. We trade with the traps. But what is another important trading concept that Uncle Charters try to talk about? It is the level to level style approach. Why do I say level to level style? If you short support, you play it to the next support. If you long the breakout of resistance, you play it to the next resistance. Why do we do this? You guys see the average retail trader, they have like this linear mindset where they think the market just goes up or the market just goes down. If you're a bear bias trader, you think the market is just going to go down and you're going to try your best to call a top every chance you get. And you're going to look for any reason to call a top. And if you're a bull bias trader, you just think stocks only go up. And you think the market just goes up. See, the thing is, the market is not linear. It's not linear. Am I using the right words? I don't even know I'm using the right words right now because I'm losing my mind. I think the trading spirit is taking over, the holy trading spirit. Guys, what I'm trying to tell you is that the market cycles between two phases, the trend phase and the chop phase. For some reason, the average retail trader think it's only in the trend phase. The truth is, the market spends more time in the chop phase than it does in the trend phase. All we can do is hope that there's volatility to trade. Let me explain, guys. You guys see, since December, the market has been chopping. We've been chopping for a month now, but thank the Lord Almighty that volatility has been decent. And sheep style traders, we trade an intraday, catching those level move. But you guys look at the bigger picture. While volatility has been decent, we've overall been chopping up and down, up and down. You remember the chop we had back in late November? Volatility was tiny. Volatility is small, but it still doesn't change the fact that we are chopping. Now, what are we chopping for? Are we going up? Are we going down? What are we chopping for, Uncle Charters? Well, the trend has been bullish for quite some time now. It started back in October of 2022. It's been continuing since October of 2023. Guys, the trend is bullish. So if you ask me, am I bullish or am I bearish? I'm going to tell you I'm bullish because the trend is bullish. The trend is still bullish. Now, intraday, that doesn't mean I don't buy puts. If there is a situation where I can buy a put and make money off of that, I will. Let me explain. Look at this 15-minute chart. I had a level at 475. Okay, I wrote in my Discord right here, 475 is the first resistance. If it clears, 476.5 is in play. All right, that was the first level. On the 15-minute chart, you guys can see right here, at 10 o'clock, SPY cleared 475 and it hit my 476.5 level. And then it pulled back. Do you guys see why I play it level to level? Because if I didn't play it level to level and the market pulled back, I would have been crying. But I stuck to my trading plan and played it level to level. And what's one of the greatest trade setups of all time? That's right, the false breakout setup. Look what happened here. Around noontime, we broke back below 475. We cleared 475, and then we broke back below 475. That is a false breakout setup. And look what happened. Broke it down, pushed a little lower. Back tested 475 as resisted. Did not recapture on the 15-minute chart and then push lower. Back test and go. Break down support. Back tested it as resisted. Support becomes resistant. That is bearish price action behavior. Push it down. And where did it go? Down to my 473 level. Pretty sure I wrote that I'm pretty sure I wrote that. I wrote here that 475 could not hold as support. 473 failed next. 471.3 incoming. Now we never got 473, but 470. We never got 471.3, but 473 was the next target. And what is the principle of Uncle Charters trading? Level to level. So when you get this breakdown of 475, the next level to level target was 473, and you guys see why? Can you guys see why Uncle Charters plays it level to level? It's because I want to end my day green, man. I'm not trying to be right. I'm not trying to be wrong. I'm not trying to predict. I'm just playing the setups level to level. I'm not predicting. I'm just reacting to the price action. Okay, guys? That's all we're doing. Now, what's next for the SPY? That's what a lot of people want to know. What's next for the SPY? Well, I said in the last video, seasonality says there could be a top around this time. Now, is there evidence yet that we are in a toppy situation? Not quite. We're still overall chopping since December, right? We got a little close, a little lower than last week, but no critical level has been lost. What is the critical level, Uncle Charters? Well, that critical level I'm referring to is 471.3. I have a lot of levels, guys. I know some of you guys complain that I have so many damn levels. That's because I play level to level, man. I play level to level. Anyways, but the critical level is 471.3. Swing traders, this is where y'all want to pay attention. That is when I would be bearish on the breakdown of 471.3 and especially 469. Those two levels fail, I would be bearish in favor of a deeper pullback. Okay, now that for me, that would be good for a swing put when we lose these critical support levels. Critical support levels. Give us that false breakout setup. We don't call tops here. We trade with the traps. We don't call tops. We call false breakouts and false breakdown setups. I don't know what the majority's doing, but I know what the minority's doing, and they doing what the sheeps are doing. It's not many of us, guys. Very proud of that. But we got to change that. We got to change that. Anyways, 473 is support. That was today's low, of course. And 471.3. Those levels fail bearish. All right, and then we get the lower targets in play, okay? 469, 467.54. 66, 464, and 459.4. For all you level-to-level traders, those are the levels that I got below. For all those non-level-to-level traders, just ignore what I just said. All right? But to be bullish, 473 defended. It'll need to show some follow-through. We did clear 473 last week, and it defended as support today. So follow-through would be to clear 475 and 476.5. Okay, today 476.5 is 0.6 actually defended as resistance. So if today's high clears tomorrow, it's big possibility we're heading up higher. Back to test 478.6. That's the Fibonacci level, and that is a critical level. That's the critical level. All right, and if that clears, we're likely heading up to all-time highs, and maybe, just maybe make a new all-time high. We'll see, guys. Trade it unbiasedly. It don't matter if it goes down. It don't matter if it goes up. The only thing that matters is our P&L. Catch your level-to-level move. Leave your runners. If you want to swing, use your runners. Why? Because risk management comes first. Number two is consistency. And it's very hard to be consistent when you're always catching home run in a market that likes to chop more than it trends. That's why level move. It helps with the consistency. And then number three, we worry about the profits. And let me tell you, if you master risk management, if you get really good at consistency and getting those base hits, you can always size up. All right. Those $1,000 days started with consistent $100 days. Those $10,000 days started with consistent $1,000 days. What Uncle Charters is trying to say is there's levels to this, and you guys got to take your time to master the art of sheep style trading. I believe in you. Let's move on to Triple Q, guys. I hope you guys got the plan. Uncle got a lot of energy today. Once again, we got rejection right around that 411 zone, 411.2. Today went to 411.12. Just couldn't break it down. That's 3 rejections from that zone, guys. We know what needs to break. We know where the main supply zone are. We know where they are. They're up around 411 to the 411.3 zone. Okay, I'm gonna give it a zone now. That's right. All right. So I tell you this, the more triple Q tests that zone, the more the sell orders get drained. Okay. So bears need to step it up. If they're going to be rejecting, they need to show follow through, break down 409, break down 47.5. Definitely break down 406, that's a fib level. Definitely break down 404, that's a fib level. 402, 399. I think you guys get the picture here. Break down some darn support levels. But if you're a bull, you keep testing that resistant level, it's eventually going to get drained. And once it finally runs out, there's going to be nothing to stop them from heading back to all-time highs and possibly setting a new all-time highs. You guys get what I'm saying? Does that make sense? Am I lying? Am I lying? Am I Mufasa? Oh man, Tesla. Oh, this is a 15-minute chart. Guys, listen. Let me tell you, there is no prediction in what Uncle Chart is. Let me show you what I wrote in Tesla this morning. It's 9:28 a.m. 215 is first resistance. As long as below and 213 fails as support, sell-off continues with 211 and 209-ish in play. That was the bear case scenario. If 215 and 217 clears, back test up the fib level at 219-ish in play. Bullish only if 219 recaptures. That's the bullish case scenario. Okay, and of course I try to alert when something clears and stuff, but it's better when you guys try to react to the price action independently. But look what happened. There's no prediction. Broke 215. Broke 217. Smash 219. Smash 221. 221 cleared. Smash the next target at 223 that I had. Look it. And then it pulled back. If you would have entered 215, leave a runner at 217, your day would have been fine. You would have been nicely green. Anyways. And then what happened? We had a false break. It was a bit noisy. But we had a false breakout of that 221 level. And boom, it hit 219. And then, it, overall, bulls, it was intraday on the small time frame. It was the bulls day. Okay? Got a nice little relief bounce. But is that all it is? A relief bounce? Or is there more to it? Let's go to the daily chart. All right. It's still looking very bearish to me overall. Okay? So here's the thing, though. We got a false breakdown setup, guys. Overall, still bearish, but we got a false breakdown setup. We don't call bottoms on this channel, but we watch those false breakdown setup. Now, you guys know I got fib levels. I got fib levels from July high of last year and October 2023 low of last year, okay? Fib level, 23.6 fib levels at 219.24. We broke down that level last Friday. We got a nice gap down going as low as 212-ish before we bounced intraday. And guess what? We closed at 219.9. That's above that 219, 23.6 fib level, guys. That is a false breakdown setup. Not a very strong false breakdown setup. Not a very strong one. Not a strong recapture. But it is a recapture nonetheless because we closed above. You got to watch out. So tomorrow, 219 is the equilibrium level. If it breaks back down, this recapture is a false recapture. Another version of a false breakout. Below 219 is bearish. As long as we stay above 219, this recapture stays intact. That means for us to stay bullish. And of course, if 223 can clear, we'll get a deeper bounce up higher. Maybe to fill the gap to 227-ish, maybe even higher. But overall, bullish above 219, bearish only below 219. Okay, guys? NVDA. Oh my gosh, this is legendary. This is legendary. If any of you guys took this trade in Uncle's Discord and made a lot of money, consider joining my lifetime membership. I'll give you 50% discount. Just send me a message, okay? But let me show you. This was legendary. This was beautiful. Uncle made a lot of money. I hope other people did. Listen. I wrote right here. 549 is first support, right? If 551.5 clears, what did I write here? Look to long with 553.5 and new all-time highs in play. I was only bearish if 549 or 547.5 failed. What happened? We cleared 551.5. We cleared 553. We just cleared resistance level, and the rest was flipping history. goodness gracious. Oh, guys, as of right now, let's go to the bigger time. Let's go bigger time frame. Put things in perspective. Listen, goodness. Listen, look. I had the 200% fib extension level at 560.86. As long as above 560.86, there's no reason to be bearish. There is no, oh, but it's overextended, Uncle Charters. Don't matter. Don't argue with the price action. Don't you argue with the price action. I'm telling you. I had too much coffee this morning. It's my wife's fault. Honey, why you give me so much coffee? 560.86. I'm telling you. If you guys want to get bearish, that is the level that needs to break down. If that level breaks down, that's when you want to enter puts. Okay, now where did he close? Where do we close? We closed at 563.82. All right, that can be a support level as well. 563.82 and 560.86. Those are the two support levels. Okay, those are the two support levels. If they break down, then you can look to short. We get a deeper pullback back down pretty low. Okay, but overall, as long as above 560.86, we are bullish. We reached a high of 568.35 today. Obviously, if that level clears, we are heading up higher. Holy moly. Do you guys want to see that? Do you guys want to see that? I don't know. I don't know if y'all want to see that. Okay, here's IWM. It is testing this important blue trend line. This blue trend line that I had since October 23. It has kept IWM in a bull market. And we got another test of it. Okay, we got to be careful. Below 190.8 tomorrow, bearish on IWM. Today's low was at 190. If it breaks 190, even more bearish on IWM. And we could possibly go test the 50 daily moving average, which is around 186.69. And below the 50 daily moving average, that would be extremely bearish. But I tell you this, below 190, we break down this trend line. Breakdown would be bearish. Okay, I will only trust the bounce from this trend line if we clear resistant levels, starting with 191.5 and 193.3. Those levels clear. We are bullish, guys. Look to long, and we are going to head up higher, maybe up to 197 and 198.75, maybe a little higher than that. Apple, bounce off the 200 daily moving average. Again, no coincidence where it bounced. The market makers look like they want to keep Apple above the 200 daily moving average. If they're going to show follow through tomorrow, they will need to clear 184.5 and 186. If those levels clear, look to long, guys. 50 daily moving average is at 189. Fib level is at 191.2. Those would be both targets with 194.5-ish in play above that. Okay, I'll only switch back to bearish below 182, and if we can finally break down the 200 daily moving average, which is around 180.8, we break that down, then I would be bearish on Apple. Microsoft, we got a higher close. Look like a funny red candle, I know, but it is a higher close from last week, and that means we did get the breakout of the 1.382 fib level at 388.68. Could this be a top? Maybe. But we got to break down 388.68. If it does, could be a potential top. I would look to short with 387, 385, 383, 380 in play, okay? Possibly even lower. Okay? But it has to break down 388.68 for that to be possible. Overall, above it, we are bullish. 390.5 is resistant. If that clears, 392, 394, and 395.44 are targets. 395.44 is my 1.5 Fibonacci extension level. AMD, we had a beautiful trade setup. This is a trade idea only for tier 2s and tier 3 members, guys. We wrote this trade idea for AMD. We talked about this cup and handle pattern. All right. And I wrote about the cup and handle pattern, and I wrote this would require AMD to break above 149.5. If it does, kind of bullish. But this would put 151 in play. That is the double top level of the cup. And if it clears, if 149.5 and 151 clears, double top canceled, cup and handle could try and play out, put in the higher targets in play. I was only bearish below 148. And guys, look at this cup, handle, breakout. It just kept going up. It's still trying to go up right now. Holy moly, the cup and handle played out, guys. As of right now, we broke that 1.618 fib level, which was at 157.3. As long as above, we are bullish. All right, today's high was at 159.7. Let's round it to 160. If 160 clears tomorrow, I got the next Fibonacci extension level at 164. That's all I can say. I wouldn't get bearish until or unless we break below 157.3 to put 156, 154, and 152.6 in play. Below 152.68, that would definitely be bearish as well. False breakout setup is what you need. Don't call it top. Google over looking pretty choppy right now. For a big direction to the downside, it's going to have to break below 144 and 142.38. Swing traders, that's for you. Okay? And, as far as to the upside, today's high was at, 145.8. I'll run into 146. It's going to have to clear 146 to put 147.3, 149, and 150.37 in play to the upside. Netflix, we got that downside. I mentioned it, below 491.4 would be bearish. And the mother candle's low was at 483.8. We broke that down as well. Holy moly, we are looking bearish. As long as below 482.7 and 483.8, we can round it to 484. Stay bearish on Netflix. Follow through would be to break down 478 and should get some lower targets in play. 474.7, 470, 468.5, 464. They would all be targets, okay? We're going to need a false breakdown setup. If we're going to get a bottom, that means recapture of 482.7 and 485. Those are needed to trigger some upside. All right? Meta. Look like it's pulling back. If it breaks down 367 tomorrow, look to short with 365 and 363. Possibly down to 358 in play. I'd only switch back to bullish or be bullish or look to long if resistant at 370 and 372.5 can clear. Both the levels clear, we could head back up to 378. Amazon is testing that critical fib level, support level at 152.6s. If it breaks down, guys, look to short with 150.7, 149, and 147.7 in play. All right, I would look to long only when we break resistant level. So we got to clear resistant at 154. If it clears 155.6 and 157 plus would be back in play, guys. Did I get everything? I covered a lot. My brain is farting so hard and it stinks up there. Let me go to Darkpool. Darkpool level. 3.3 billion in premium at 476.75. Guys, remember, Darkpool is not telling you if it's bullish. It's not telling you if it's bearish. For there to be someone buying at this level, someone has to be selling at that level. So it doesn't matter who buys or who sells. All that levels, if we know what the levels are, and we can use them as support or resistant levels. But we label them Darkpool level because they're for different reasons. Do you understand what I'm saying, guys? So we got 476.75 at 3.3 billion in premium. We also got rejection from that zone. So that means someone tried to sell at that level and someone also bought at that level. Okay, we're gonna have to wait a couple of weeks to find out who did what, because this is Darkpool level. Big money can hide their intentions and identity. All right, so the way I approach this is very simple. Above 476.75, I would be bullish. Below it, we could be bearish, but that's why I give you those levels so you can use it to combine with these Darkpool levels. Speaking of Darkpool levels, 1.8 billion at 474.97, 1.6 billion at 474.96. You guys ever notice how close these Darkpool levels are close to Uncle Chartis's levels? Ain't it crazy? These Darkpool levels came in today, man. I'm just saying. It's pretty cool. All right. So let's check the option flow. Filter for 100K pre. Did someone already set up everything for me? I know my tier 3 members, they have access to my stuff. They put the filter for me. Thank you, guys. Here it is. Guys. When was the last time we saw this? This is worth noting. Bearish for the SPY. What about Triple Q? Bullish for Triple Q. Here, higher volume for puts, just higher money bigger money going in for calls. Overall, still bullish, not bearish. IWM is bearish though. Okay. Tesla, bearish. NVDA still bullish. Apple is bullish. Microsoft is bullish. AMD is bullish. GOOG. What? How about GOOG with the L? Yeah, it's bullish. Netflix is bearish. Meta is bullish. Someone buying the dip. Amazon is bullish. Alright, thank you guys so much for watching. If you want more content from Uncle Charter, definitely please consider joining Uncle Charter's Discord channel. I'm trying to get to 200 members. Or if you're not, it's fine. Just please like and subscribe the video. I'm also trying to get to 10K subscribers. Yo, help an uncle's dream come true. Other than that, have a great evening. Peace.